Good morning, traders and investors around the world. Welcome to this Tuesday, April 12th edition of Pre-Market Prep with StockOdds. Joel Elconin joined by Rob Friesen here after a busy day yesterday in the market. Sorry we couldn't be there for you, but we're back today with some ideas, some trading ideas, what you guys are looking for. Up 34 handles at 43, 43, 43. Nice bounce this morning off the CPI data. And now we're just kind of chopping around. Gets kind of tough. Crude caught a bid back at triple digits, up at $100.16 at 589. Gold catching a bid as well, up 23.40 at 1971.70. Silver right in the middle of the 25 handle, up 53 cents at 25.520. Bitcoin, that's down 35 bucks, 39.920, trying to form a base here at 40K. And Ethereum futures are up 15.50 at 30.20.50. Going to bring in Rob here. I'm going to stop the screen share. And Rob, I love the topic today. Gap fills. Sometimes it takes a really long time. It is not 100%, but if you're patient, day gaps, weekly gaps, monthly gaps, a lot of them get filled for one reason or another. That's our topic for today.
Yeah, I mean, if we were to take a shock jock type approach, we'd say all gaps get filled, right? And we know, of course, that's not completely true, but I mean, that's the emphasis, is that gaps get filled. Now, there's different types of gaps. We know that there's, news-related gaps specific to the stock. There's industry news related gaps, market news related gaps. There's sympathy to other events globally that may or may not be meaningful to the US markets, and that's what we're trading. So there's all kinds of gaps, and they get filled at various rates depending on the catalyst and the engine and all that. But sometimes we forget the simple things, like to even be alert and look for a gap fill. We just forget. So part of trading is really keeping a journal so that you can remember some of the things. You need a flight plan every day, right? You need that checklist like a pilot, like bang, bang, bang. Did I consider this? Has there been this? What's the context? What's the engine? Things like that. And of course, the engine today, obviously CPI and blah, blah, blah. But the thing is that, we just had a gap yesterday, and that gap was, a fairly significant movement from the close to the open, and then from close to close. You can look at it both ways. So let's just see where we're at here. Joel went over some stuff, but I'll share my screen. Anywho, okay. Is that showing up?
Just give me a second.
I think it takes a bit for you. I think the audience sees it a little bit quicker, but there's the gap that we had on the Qs, and today we're attempting to fill that. Now 350 we mentioned previously was a big number on the support side. It also can be a big number on the resistance sides, which would be a gap fill, right? So let's keep that in mind, and let's not be surprised if it ricochets off of it before it goes through it or whatever. But we can look back in time and we could say, is it true that gaps get filled? We have a gap here that hasn't been filled, and we have this gap that just recently here that we're attempting to penetrate. But here was a gap, and that got filled within a reasonable time. Going back, there's a gap there that got filled in a reasonable time. Here's a gap that got filled in a reasonable time. Here's a gap, all filled in a reasonable time. So for me, the sweet spot is obviously you're looking for the very next day opportunity, but sometimes the catalyst is still putting too much pressure on the reason for the gap, and it doesn't happen right away. But you have to be alert and say, can I expect a gap fill the next day? That's a good question. And then 3 days, 5 days, 10 days. And I think the sweet spot for me is within 5 days of the gap, we usually have seen a fill. And some gaps, depending on what they are, could take longer. But if you're using that sort of 1 day assessment, 3 days, 5 days, I think you've got the ball rolling in the right direction. Again, here's a gap filled within a few days. A slight gap there filled. Here's a gap that was filled within 5 days. So, I mean, you can see the theme. Here's a gap filled within 5 days, right?
Yep.
So,
Sometimes it takes a little bit longer.
It does. It depends what it is, right? And but that's a theme of, this is called first principles or basic understanding of markets and price action and what tends to happen. Even basic things like, why do we have consolidation areas? Well, a lot of times it's the places where people did take positions and then it moved outside of that, so they got stuck. And then when it gets back, they go, thank the good Lord that I broke even, took all that pain, but now I get my money back. And that's what creates some of these consolidation areas, distribution, support, resistance, and things like that. And so we want to be really mindful of streaks. And you can go to StockOdds and you can look up streak values and the odds subsequently, the odds and expected performance. You can also look at gaps. So like I look at things like this. So move, close to open. And let's in the symbols here, we've got Q, SPY, IWM, and diamonds. And we explore that. So we've got an output of 5 days from a close to open signal, right? So we've had an event on the 11th, we had a gap. We could also look at it from close to close. That's another way. So close to open is the overnight gap. And we had that on the 11th. And 5 days later, what are we seeing here? Diamond odds are 68.6 with average performance 0.82. So you can, assess that against how far did we come down, like, within the next 5 days. If we have that type of performance, does that end up filling the gap? IWM 59.8 for average performance 0.24. Qs 53.6 and SPY 62.8. Okay, now if we go out 10 days, what does that enhance it? Does that change it? So we see a notch up on that, the Russell and the Qs notch up quite respectively. So looking at it 3 days, 5 days, 10 days to get your bearings on what's possible. And I mean, if you're a swing trader and you're looking for great opportunities, I mean, you could take this approach with pair trading, looking for something that was sympathetic in the gap and really had a big move, pairing it with something else that maybe didn't and seeing that mean reversion come back in. Just looking at the ETFs and seeing where the opportunity lies with that. So yeah, it's possible to get some meaningful insights and then to prepare yourself. But if you don't have that sort of checklist of what you're looking for and reminders, and we just forget as humans. Something else, we start listening to something or looking at something, we just completely forget. Oh man, I missed it. I should have thought about that. I knew to think about that, but I missed it. And that happens to all of us. It's myself included. So the pre-flight checklist is really important, so you don't crash your plane. Okay.
Yeah, and it's also just like different. I mean, this is just a different tool. Like there's different times where you can use this. If it's a slow, quiet market, then it's something that you don't necessarily need to pay attention to. But it's just another tool in your toolbox. I just want to post something in here. Rob's been working hard on a product, and I'm going to post the link in here, and I'm really excited about this. This is something we can start working on. And it's just from Stock Odds.
Yeah.
Rob mentioned it before. It's a compilation of the data, long and short recommendations. If you're a long only trader, then, you got to use it with, certain discretion, but long and shorts. And also with the shorts, if you want to, perhaps try to play it in the put market, which is a lot more difficult, but click on this link, check it out, use the code PMP, and I'm going to try and coordinate this into the 9 o'clock show. See if there's news on issues, see if there's, ratings changes,
Yeah.
little subtle things
I like
that
that. Yeah.
they can affect the, the
I,
probability. So we're
I,
really
I like
excited
that.
about it.
I like that opportunity in the pre-market there to, to discuss and vet some things,
Okay.
because so the way that the items are selected. So here's an example of what our list from the S&P 500. So this is algorithmically driven. We're not advisors. This is the publisher's exemption of just publishing data that's statistically relevant. And we're not saying you have to buy this. You could do the opposite if you wanted. These are ideas, and let's call it ideas worth exploring. Okay, because there's
That's
a
a good way to put it.
statistical reason that they're coming to the surface, and they may not be the ones with the most opportunity. They could be even more on the boring side sometimes.
Yep.
What the point is that, would you rather listen to some talking head pumping their book, or would you rather have some ideas that are statistically relevant that you can run with? Okay.
Day in and day
I'm
out.
tired of the talking heads yakking their book all the time, always having an agenda, blah blah blah. I'm tired of that. Okay.
Pump and dump, pump and dump. We're
Okay,
the
I
opposite.
don't have an agenda here. This was statistically driven. So let's see what's happened since. These were the 10 that were selected for today. And again, craziness, because you think about, well, how do you know what's going to happen after CPI? No idea. No idea. We could have been down. Who knows what, right? You have no idea what's going to happen.
How are we doing today?
So we have to look at it from the open to the close time frame. So you can go open to target, or you can put it on a watch list and see if there's a discount to pick up, whatever. But you kind of have to look at it how we're doing from the open. So that's what I have right here from the open. So Apple was a long, so it's up 0.41%. AMD was a long as well, and it's down. If it was up to me, I'm really kind of skeptical of the semi area. Like it's kind of a landmine. There's a lot of,
yeah.
I'm skeptical of it. So it could be like, if you got the list and it said, the algo said, you know what, this is a pretty good opportunity for AMD, you might go, semis, not interested. Right? Or like, for example, if you got a bunch of financial stocks and you saw that the TLT was way down, that'll probably be beneficial for financials for the day. And if it had some shorts, maybe you go, not interested. It's okay. You don't have to do everything. These are ideas. But if you're going to, do some, make sure you think about, is there a need to hedge or not? Like, there may not be a need to hedge if you have a bunch of longs and a bunch of shorts already in play. But if the list came out and it was all longs, you might say, well, I'll have the SPY standing by as a hedge, blah, blah, blah. Okay. So Amphenol was a long, that's slightly up.
Okay.
DGX was a long, that's up nicely. And I know we love this stock, Enphase, but it was a short pick for today and it's down. So that's nice, a nice profit. Flowserve was a long or short, I can't remember. Hold on a second. One sec, I forgot.
Okay.
I'm doing this by memory here.
Okay, you're old like me.
Yeah, I'm old. I am old, actually. So Flowserve was a short, so that is against us. Hilton was a long, that's for us. Johnson Johnson Controls was a long, that's for us. Juniper Networks was a long, that's for us. And Ross Stores was a short, and maybe it thinks it's the next Tesla or something. I'm not sure what's going on with Ross. But anyway, that was a short, and it's it's against us. Overall, we're still running at about 0.3 to 0.4% return on capital. So it's doing okay for the day so far, but there's lots of day left. We'll see what happens. Anyway, the point is I guess it's hard. I've come to realize, because I've been in the business so long, I've come to realize that it's really tough for some people to really gain a handle on how do you best use the stock screener to derive ideas. So the point with this is to try to give something to subscribers that can get them started and see that there is some merit to statistics. And then you can add your technicals, you can add your macro, your catalyst, your news stuff, you can add your, just awareness and knowledge of things, your experience, and any other indicators that you want. So it gives you a starting point that is, I would say, unbiased, only because it just comes from the statistics. So there's nobody in there trying to, steer you in a certain direction and sell you snake oil or something. Okay.
Okay. All right. Pre-market prep with StockOdds. Wrapping it up today. Little bit of a fade here. We're still nicely in the green, but we're losing altitude. Up 27.5 handle. 27 handles here. Coming on the low of the intraday session, folks. We'll see what happens. Thanks for joining us. Back tomorrow.